More commercial companies doing things in space. How do you regulate it?
So NASA is not a regulatory agency. What NASA does is exploration, science, we do development, and of course we invest in the technologies and capabilities to make the United States remain preeminent. That's what we do. Now, there are regulatory agencies in the U.S. government. When it comes to launch and reentry, it's done by the FAA, the Office of Commercial Space Transportation. When it comes to remote sensing, that's done by the Department of Commerce under NOAA, the National Oceanic and Atmospheric Administration. And if you look at what this administration has done through the National Space Council, we are revamping the regulations in a way to enable more commercial capabilities than ever before, and that's a very positive thing for the United States of America. And as a member of the National Space Council, as the NASA administrator, which the National Space Council is chaired by the Vice President Mike Pence, we've seen dramatic increases to the space commerce based on the regulatory changes.
All right, Jim Bridenstine, NASA administrator, thanks for joining us today.
Thank you. You bet.
Tight range today. Dow's up 37 points. We're back after a quick break.
Hi, my name is Sam Davis.
In cinemas November 15.
So you're going to build a car to beat the Ferrari with a Ford, correct?
Get ready for Le Mans 66.
They hate guys like us because we're different.
Starring Matt Damon and Christian Bale.
What are they doing? Making your car go faster?
That's more like it!
Based on the incredible true story.
You got a plan?
It's high risk.
Of Ford versus Ferrari.
No, I thought the whole point was to win the damn race.
Le Mans 66.
Hit it.
In cinemas and IMAX November 15.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live. Regular season matchups and rivalry games, conference championships and bowl games. The college football playoff.
Throwing, he's got it in the stiff arm. End zone, touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn. Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
It appears that the NBA's move to just shut up and dribble in China is paying off. Tencent, which has the exclusive rights to NBA streaming in China, quietly resumed airing 2 league games today. Tencent was one of several companies to hit back against the league last week after the Houston Rockets general manager Daryl Morey tweeted support for anti-government protests in Hong Kong. Going to pay very close attention to the ways in which they were allowing their players to be questioned. Some of their media appearances toward the end there curtailed because they thought it put some of the players in an unfair position.
Mixed bag. Did they shut up? I felt like on the one hand, Silver said they're not going to shut people up. On the other hand, they didn't have availability. Maybe they threaded the needle.
Yeah. All right. Meantime, earnings gets off in earnest this week. We've got some big names, including IBM, Netflix, and other tech heavyweights.
Get ready for tomorrow. Let's get to Sully.
All right, Carl Morgan, John, thank you very much. And I am Brian Sullivan in for Scott Wapner today. Investors having kind of their doubts about this phase one of a trade deal, and they're getting ready for an earnings avalanche this week. It is 12 noon, and this is the halftime report.
Wall Street underwhelmed about the trade truce. The risks still facing stocks. The big banks leading the flood of earnings this week. JP Morgan, Goldman, and Wells Fargo on deck. The traders take their position. Shares of Western Digital soaring 60% this year. And it just got a huge upgrade. It's our call of the day. The investment committee is ready to go. Halftime report starts right now.
All right, good Monday. Happy Columbus Day. It's good to have you with us on this Monday. Your investment committee today is Joe Terranova, John Najarian, Jenny Harrington, CEO and Portfolio Manager at Gilman Hill Asset Management, Mr. Ron Insana, CNBC contributor and a senior advisor to Schroders North America. And also with us is Keith Banks, Bank of America's Vice Chairman, Head of the Investment Solutions Group. Keith, welcome. Good to have you with us as well. All right, safe to say that the Friday euphoria over a partial trade deal, so-called phase one, may be fading fast. Our sources telling Kayla Tausche that China wants another round of talks before signing any kind of a deal, phase one or otherwise. And Secretary Mnuchin on CNBC this morning saying he expects tariffs to go up in December if there is no deal in place with China by then. So, guys, that's the big story. The markets doing well. Ron, I'll start with you. Doing well Friday. Today, not giving it back, but we're not doing much. I know the bond market's closed, so take the day what you will. So take us out where you see things headed.
I'm actually not sure. I mean, I'm underwhelmed. If the market's not
Most
underwhelmed,
honest answer ever.
Well, yeah. I mean, I'm underwhelmed, nonplussed, whatever you want to call it, about the trade deal. I think it needs a lot more work. It does look like it was more of a PR event than an actual sign of progress that's being made. China came out this morning through its official newspaper and said more talks are necessary.
They hold the champagne was their quote or something like that.
Yeah, and they also didn't commit publicly to anything that the president said they committed to, which is agricultural purchases, intellectual property protections, and the like. So I don't know that there's anything definitive. Maybe over the course of the next 4 or 5 weeks, as the president suggested on Friday, pen will be put to paper and we'll see some details. But right now, those details are quite fuzzy.
All right, so here's the dirty question, Joe Terranova. Does it mean this is all about fundamentals? Will earnings matter here longer term, not just on an individual day trade, but matter going forward when we've still got this overhang of the trade guillotine, if you will?
Yeah, so will earnings matter? The earnings will ultimately always matter, but if you think about this time last year, earnings were incredibly strong and the market peaked. So earnings can be somewhat confusing. I think you're on the top line, you're going to see a little bit of a struggle here during the earnings season. As far as revenue growth, you're probably going to get your 5 or 6%. That's probably going to be where the numbers are going to come in. There are going to be some sectors that are going to disappoint. Certainly financials look like they're going to disappoint. Energy is going to disappoint. But I think the expectations have been lowered, and they've been lowered just enough to keep the positive momentum going on for the market overall. Listen, as it relates to the news that we got on Friday, truce, that seems to be the word. That seems to be enough. If you're a trader, if you're an investor, whatever your focus is, you cannot get too involved in these headlines. It is going to disrupt you from ultimately what is going on in the markets. And the markets continue to, for whatever reason, maybe it's a limited supply of investment vehicles and strong demand, whatever the reasons are, though, we continue to see multi-assets performing well in 2019. And just look as Apple as an example. Apple, 238, could be the proxy for the entire U.S.-Chinese trade dispute, but yet pressing towards all-time highs.
And Skyworks Solutions has done great as well. And Keith, you guys, it wouldn't be a show if we didn't have an acronym. You guys have a good one, METER.
METER, yes.
Right? And M is monetary policy. E is earnings. We can get to the T. We can talk about trade in a minute. You believe that the E, the earnings expectations this quarter, are a little too negative or pessimistic. How come?
We do. I mean, right now, we believe the consensus is somewhere between -2% and -4%. We just don't see earnings coming in that manner. We expect earnings to probably be more like flat, if not up a little bit. You know, Joe made the point. Right now, the sentiment in the market is so negative, whether it's on trade, whether it's on earnings, whether it's on the Fed. And I think what that has done is set us up for nice moves in the market, which we saw Friday, when you get a little bit of positive news. And Friday with the trade was a little bit of positive news. We never thought we'd get the grand deal. We always said it would be a truce. But the one thing you got to recognize, we went from escalation to de-escalation. Admittedly, step one in a multiple-step process, but that was enough on Friday to give us a nice pop in the markets.
Yeah, and how much of that earnings pessimism, though, if you've dug in, it comes from energy, which has just been, decimated. The numbers are going to be terrible.
Well, I think that's certainly part of it, but I just think people right away are expecting the glass is half empty. And so I think that's the lens through which most investors are looking at it. We've had continued major negative flows out in equities. So again, we think we're setting ourselves up for some positive news, not to mention the fact we think the Fed will continue to do what it's doing, and that's very important as well.
Yeah, I thought that the statement from the China Global Times editor, where he said breakthrough, and he said doing things, I'm paraphrasing, but he basically said, don't view our lack of enthusiasm as that we're not optimistic, because we are. And as soon as that came out, Brian, we jumped from -120 to practically unchanged, and now we're off to where we are now.
Yeah, because the messages are almost now as confusing coming out of China as they are from here.
But that's their mouthpiece. That is their main mouthpiece.
I know that, but we also had hold the champagne, that they're not going to sign the deal. Kayla's reporting that they want to have more talks. Nothing is done.
Right. He said
they got a deal to have a deal to have a deal, John.
He said the initial reaction is moderate, but that is where we are. That is what we do in China. He said until the ink's on the paper, we're not going to, as you say, pop the champagne. But as soon as he said that we had a, quote, breakthrough, his words, not mine, that's not paraphrasing, that is when the market turned. And that's why there's optimism again. And that's why they're not erasing the nearly 400-point rally
we're still
from Friday.
I don't want to sound like we're down 400 or something, Jenny.
So last week we sent out our quarterly letter to investors, and we realized in the last maybe 5 letters that we put out, we thought that we were nearing the end of a trade war. And in this letter, we just kind of said, you know what? Who knows? We said, all we've seen are threats, retractions, partial implementations, and retaliations. And so in this letter, we stood back.
That was just last week.
But exactly, it was last week. It was 6 months ago, a year ago. That's all it's been. I think Keith categorizes it well by saying it's a slight de-escalation, and I think that's really positive. But from an investment perspective, we're taking a step back and saying, like, this is noise. We're going to live with noise. We'd be foolish to try to predict where it's going, so we're not going to try.
Well, that's it. You shouldn't make your investment decisions based on the specific language from a Chinese newspaper.
Well, it depends. If it's the official Chinese newspaper, then maybe you do, and you want to look at those companies that might be most affected by the.
If the headline is "We have a deal,"
if you're trading, of course.
But unless the headline is "We have a deal," I'm not sure how much else.
Right, and again, we've been talking for months now about buying quality, staying with that for a longer run period. You know what? It may be a de-escalation, but the one thing that's still true is that the tariffs are in place. They're just not going up. So we're still living with tariffs, which is suppressing CapEx, which is suppressing global manufacturing. And if we get to the point in December 15th where the tariffs are then pointed at consumer-oriented goods, you have a different set of problems. And so I think, yes, you don't live headline to headline, but you do have to take these things to account because on a macro basis, they do matter.
So last week, I keep coming back to it. John and I spent a lot of time talking about it last week, and I know John's brother Pete disagreed with us on what was most relevant, but the Federal Reserve, and Keith mentioned it, the liquidity that they told the market that they will give you in Q4 2019, it is a completely different Fed versus the Fed in 2018, which was hostile and taking the liquidity away. So that's something that can't be lost if you're an investor or if you're trading in the markets. I think the other thing that's important is the strength of the consumer. Ron mentions the manufacturing slowdown. Yes, that's evident outside of the U.S., and now it's becoming more, unfortunately, evident here in the United States, but you've got the consumer that remains strong. This week, you're going to get retail sales. Is it going to be 7 consecutive months of growing retail sales? If it is, that continues to suggest the consumer is powering the economy. If we see something very ominous in the retail sales, I'll tell you what, Brian, to me that's more troubling than the back and forth we're having with the U.S. and Chinese trade.
Well, if the tariffs go up on European goods, if they go up again on the China goods, at some point, I should say
Brian,
when.
Those are a lot of ifs. The reality of if the consumer is beginning to pull back, that is a concern, but let's get those retail sales numbers first.
Yeah, on top of that too, Brian, I would say you also have to factor in we're finally seeing a fiscal response globally, right? We saw it in the U.S., obviously, but now you had China, India, France, and we're hoping we'll see something in Germany before they, not waiting for a recession, but being more proactive. That's a big shift, and that brings a lot more firepower on top of all the monetary easings we've seen all across the globe.
And that brings potential capital flows to parts of the globe and asset classes that have been so distressed and so undesired. Emerging market equities or debt. Is Europe potentially for a trade investable? I don't know the answer.
But we're getting back to this debate
We're
getting back to this debate that, Ron, I feel like, we've probably had for 25 years, right? Which one? Because I've had a lot of them. Yeah, there's a lot. I know exactly. Can the stock market and the economy are not the same thing?
Correct.
Okay, and they're not the same thing. The Fed maybe can prop up the stock market. Can it help if tariffs go up and jobs slow down, is a quarter basis point cut going to help mom and pop in Davenport, Iowa?
Well, possibly. And again, the Fed and other central banks around the world still view the wealth effect as the primary transmission wire for lower interest rates. If asset prices go up, if the cost of certain interest-sensitive goods comes down, then there's a transmission mechanism for those rates to buttress the consumer. Having said that, with respect to fiscal policy that was just being discussed in Germany, they're more worried about the capacity to spend than they are the ability to spend. Can they spend on infrastructure? Is there enough productive capacity in their economy to make that work? And I think that's a bigger question.
So Joe said something before where he said it's a totally different Fed this year than it was last year. I view that a little bit differently. I don't view it as a different Fed. They just have different actions. And the thing that I like about the Fed last year to this year is, to me, I see that as a Fed that's responsible and acts accordingly and stays flexible and adjusts to different environments. So I love that they're cutting rates now. And I do think that trickles back and props up the economy. JP Morgan put out an interesting slide recently that shows that something like the top 10% of earners in the country spend 63% of their discretionary income. The other 90% spend 101%. So if you put just incrementally a few extra dollars
110 in my house, actually.
Okay. But if you put just a few extra bucks in people's pockets because their car loans and their mortgages are all linked to interest rates, you put that back in, that actually does have a lagging but pretty significant multiplier effect on the economy. So I think ultimately they do affect a positive economy.
Well, the other thing, too, we haven't talked about is housing.
Yeah.
Because sometimes people...
that's the big thing.
Yeah.
Right, and people are afraid, is the Fed pushing on a string? In other words, are we lowering rates and nothing's happening? I think housing is the best example. The Fed's not pushing on a string. We're seeing significant improvement in the housing market through refinancings and just the sales of new homes. And even though housing only accounts for approximately 4% of GDP, the multiplier effect is significant. So that's another tailwind we can see. Again, it's not going to drive the needle dramatically, but on the margin, one more thing that can help as we enter the remaining months of this year and obviously go into 2020.
Housing stocks have done okay. We talked about last week, somebody I don't know if it was you, Joe, like Lennar. Was it you, John?
Me.
Yep. Was you?
That's done great. Yep.
Love it, not like it.
Love it, still.
Why?
Because rates are going down still. To Joe's point, 2018 rates were going up. That was not good for these guys. Then all of a sudden you change that picture 180 degrees right in the first quarter of 2019, and the home builders have been off to the races. They're up between 40 and 60%, and it's the only one that I'd kind of back off from a little is Toll, only because it's just a different animal with the high end.
Yes.
Yep.
But you've got a
also very exposed to New York, where the high end of real estate, as we know, is not done.
But you've got a 360 something 30-year fixed. I mean, it's about as cheap as it ever gets. I mean,
but
prices are up.
That's why I said we're having this discussion again. It's not 2007 right now, but it may be 05.
Depends Depends
right?
where you look.
If
right?
you look at LA
Manhattan's already
County, Orange
crashed.
County, California, it's like 2% of the population can afford a house based on the actual affordability of what they're supposed to be able to afford.
I just think there's always headwinds in the market. 2019, there seems to be more headwinds, or maybe it's because we talk about them more on a 24/7 basis. But if you were to tell an investor where you're sitting right now, and I think this is the problem, I think people look at the market, they look at investing as almost like it's an entitlement. And you've got 20% on the S&P total return. If I told you we were going to go flat for the rest of the year, I'll take flat. If flat is the new up for the rest of the year,
if flat is
that's
20%.
fine with me. That's fine. That's
but you've
fine.
been flat since January of 2018.
Well, you've been flat from January of
Unless you pick the right stocks.
In
right?
2018 in different components,
Right,
different
right.
strategies. So Ron's right. Cyclicals peak in January of 2018. Fangs peak.
And by the way, and I get that argument. We hear it all the time. People on the Twitter, they write in like, oh, we're flat for 18 months. We've said that many times, by the way. No one's denying it.
Right.
Cut it in half. It's still 10% a year add in the dividend. That's not terrible.
Yeah, and that's only for the
Right?
folks that are just buying the ETF.
That's
and
what
so
I'm
forth.
saying.
Right.
So I get we're
Most
flat
of
for
us
2
here
years,
do
but
some trading.
Historically,
and if you're
it's better
doing
than
some
average.
trading, you're doing much better than that because you were picking up Facebook at 125. You were picking up
Do you
Apple
know
below
anybody who
150.
trades or has written books on trading?
I do.
I don't know.
I do. I know guys
If
that
you don't
give
have-
that book away.
It's amazing.
Fit a commercial.
Follow the smartmoney.com.
Exactly. So, Keith, bank earnings. I'm not going to ask you about your own bank. Don't worry. But you're one of the names that are coming out this week. Look at the wall. Look at all those logos out there. Low yields, good for housing. Are they bad for banks?
One thing I cannot comment on is bank earnings.
That's why I asked you. Let's see if you give me a little hint or something. Not even generally the industry?
Nah, too close to earnings.
Too close to comfort?
Keith, when you think of banks, you think of value. And in the month of September, you had that 1.5 week period where value had the best performance in a decade.
Right.
Are you seeing that clients are saying, okay, I want value once again, or is the low yield environment still suggest we want growth?
No, I think what we're going to start to see is a slow shift toward more cyclical, more value as people get more confident in two things. Number one, the U.S. economy is going to hold up around 2% or so, that the global economy will hold up or maybe even arguably accelerate with all the fiscal and monetary activity going on. If you begin to believe that, I think you begin to see a shift. You look at the put the call, and obviously, John, you can comment that better than I can, or you look at the relative valuation between utilities and financials, it's 2 times. So everything is showing you, again, we've gone to an extreme, and our expectation is as people get more comfortable, what will help also, I think, and I can comment on this, Brian, is the yield curve. We are quietly, the big concern, right, was an inverted yield curve.
Yeah.
The only portion of the yield curve that's inverted today is the 3-month, 2-year.
Right.
And if the Fed goes in and starts buying $60 billion a year of bills, we think that's going to normalize that, steepen the curve, and that's been a big concern, legitimately so.
And global rates have quietly become less negative. People haven't really commented on it, but you saw German's Bund at minus 70. It's now minus 40 something. So we've seen around
Still minus.
It's still minus, but I mean it's almost those rates have almost been, I don't want to say cut in half, but raised by half relative to where they were. So hopefully you sold out your Bund when it was minus 70 because you had a huge capital gain. But rates are creeping higher around the world without much discussion.
Which also takes pressure off our 10-year. So as you see the Bund, the less negative, that will help our 10-year continue to slowly move up, at least we believe.
Well, we always look at these numbers and they come out, and Wolf dives into them, and it's always trading and FIC, the fixed income, commodities, and currencies that have just not been good. I mean, Joe, John, do you have a view on how trading desks are doing? I know it's a tough
I don't believe they're doing.
I don't know anybody getting hired. I know a lot of people getting let go.
Trading desks?
Yeah, FIC.
The actual desks?
Not the physical desk. This isn't a Herman Miller commercial. You know what I'm talking about.
I'm being funny here, but we're talking about all the models are algorithms right now. I mean, that's what's being driven. And I think one of the struggles for the big banks is the loss of proprietary trading. So they're not as active in trading as,
and that's hurt their earnings, and it's hurt their numbers.
And the IPO business is not great.
IPO business is not good. That's why I wonder why, and I know you can't comment directly, but you did think, Keith, you did say you thought that macro earnings expectations might be a little weak, and I just wonder what would be the argument for better earnings from these companies? We just highlighted a couple reasons to be nervous.
Okay, for me, it has to be on the lending side. It has to be commercial. It has to be industrial. You have to see loan growth. I think that's important. You also have to see momentum on the digital transformation that a lot of these big banks have been spending a lot of money on. Are they getting some momentum behind that?
So maybe.
And Brian, when you look, I mean, we've hammered this several times on the show, but we haven't had a single person that comes on and says, except for Mike Mayo, who comes on and rah-rahs the banks. But they're right in line with the S&P 500, with the Dow, 18% on the year. Again, to Joe's point, he said, I'd love to just have flat for the rest of the year. I'm not saying he's wrong, but I mean, these 18% is phenomenal for a sector that is hated. For, as Keith said, when you're seeing 2-to-1 utilities valuations versus some of these banks, I mean, that's a gift. And the fact that they're 18% right now is pretty telling.
It is. And by the way, I'll give Kelly Evans a second tease because she's got Anton Schutz coming up of Menden. He's the financial guy. The regional banks have done great, so that'll be a big interview in the 1 o'clock because Anton's in the house. So
cool.
The exchange, you guys owe me lunch. All right, thanks to Keith Banks. I appreciate that. Keith. Here's what else is coming up on the Halftime Report.
Western Digital shares surging 60% this year, and one firm thinks it's going even higher, upgrading the stock to buy. One of our experts owns it, and we'll debate it in our Call of the Day. Plus, we want to hear from you. Send us your questions. Go to cnbc.com/halftime or tweet us. The Halftime Report is back in 2 minutes.
When I lost my sight.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Carl's All Change Casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
she says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range, Food Love Stories, brought to you by Tesco.
You're 169 in the queue.
I proposed on the 169. She got off at the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
All right, Western Digital among today's technology stock leaders. Shares are higher. Loop Capital Markets upgrading it to a buy with a $75 target. The stock's just under 60, but Jenny, you got to do a little pat yourself on the back because you bought it at 37?
Yeah, we added it this past January. So this is one of the rarest occurrences in our portfolio. But we bought it a couple years ago when it was trading at about 40. It had a 5% dividend yield. At that point, it had $4 of earnings. thing goes crazy, trades up to 102 about a year and a half later, we sold it, and then bought it back a year later at 37. That's unusual for us. But the reason I say this is because I think in this HDD storage space, people forget that these are real assets and real products. So every time you back up your phone, it's not going to the cloud. Your data isn't floating in the sky. It's traveling over a network, traveling through fiber, and ending up in a data center. And that storage is super valuable. It's never going to be priced at zero. It's never going to be selling for a penny. And that's the way these stocks swing and get priced.
Because it gets viewed as commoditized.
Totally commoditized. And the pendulum on this one swings way too hard. So there are opportunities when people lose their mind. And so when I bought it back when I bought it back in January, it was the same kind of thesis that Loop just put out, which is it should have about $7 of earnings.
Mm-hmm. 7.5, and they think that average selling prices are finally going to firm up.
Right. Meanwhile, it's got a $2 dividend. That's totally secure. It was secure 3 years ago. It was secure this past January. Dividend's safe. Earnings, I think, are coming in. And storage, flash, and DRAM is never going to zero.
I mean, congrats. That's a great trade. But what do you say to an investor that looks at this and say from December of 2014 into 2016, stock went down 60%, and then, it did it again in 2018. It went down 68%. How does an investor trust management that they've got a degree of control on the business model, and why would I invest?
I don't think that's on management as much as it's on the investing public who gets wild expectations for what earnings should or shouldn't be. I think earnings have been, to me, like reasonably in line with what I've expected when I've bought it. And I also think with this, most of my portfolio, when I buy it, my intention is to hold a stock for 3 to 5 years. This, you go into differently, right? You buy Western Digital when it's at a fair valuation. You sell it if it gets extreme. And if you're not...
And you just forget about 60% declines twice in the last 5 years. You got to almost...
I think you need to be careful with timing, right?
Well, clearly. I mean, so you're swing trading the stock for all intents and purposes.
Maybe. I mean, with year and a half swings in it, maybe. But I just think you need to be very, very aware of the fact that it swings, and you need to be careful. And so if you see it trading...
Is it a better options trade?
I don't know. I don't do options. But I think when you see it at 102, and suddenly there's a 2% yield, and it's at like 15, 16 times earnings, you have to know at that point, it's time to sell.
John, you know anybody who knows anything about options?
Yes, and I know that book, too. Brian,
can I have something to throw?
The fact that they moved their target up, that Courtney Gibson and her firm, Mr. Reynolds' firm, has moved up the target 50%. That certainly does, as Joe said, set up nicely for an option trade. So I'm sure that there will be. I do not have unusual options in this one, but I'm just saying this is a very optimistic view of exactly this one.
There you go. Well, good call. Congrats anyway.
Thanks.
Congratulations.
There you go.
Well deserved.
Well, as we said earlier, big bank earnings are on deck this week. We're going to talk about the 4 ETFs that you need to keep an eye on in your ETF Edge. But first, your S&P sector check. We've got 2 up, healthcare and financials. The rest are down, but the Dow is actually up 16 points, though. Keep in mind the bond market is closed today, so volume will be light. And we're back after this.
There's golf. And there's the golf.
London. Switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Carl's All Change Casserole.
So, Chloe walks in from school, tears all over her face.
Daddy,
She says,
I don't want to eat animals anymore.
I blooming love my meat, but not as much as I love my little girl. That's why we've made some changes to our old favourite, sausage casserole. Now with meat-free Cumberlands, but still with my magic touch, a dollop of mango chutney. Just as tasty as it used to be.
Better, actually.
Make your own with the new Tesco Plant Chef range, Food Love Stories, brought to you by Tesco.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. we're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. Queen Elizabeth making a formal speech to Parliament, setting out Prime Minister Boris Johnson's agenda. That speech is used to detail all of the bills the government wants to enact in the coming year.
My government's priority has always been to secure the United Kingdom's departure from the European Union on the 31st of October. My government intends to work towards a new partnership with the European Union based on free trade and friendly cooperation.
Tens of thousands of people attended a peaceful rally in Hong Kong. They appealed to the U.S. Congress to press ahead with legislation which would require the Secretary of State to annually review Hong Kong's special economic and trade status. This to provide a check on Beijing's influence over that territory. And Taco Bell pulling beef from some of its locations in Michigan, Kentucky, and Ohio. This due to quality concerns, but no more specific explanation was given. You are up to date, Brian. That's the news update. Back to you.
All right, Sue Herrera. Sue, thank you very much. Appreciate it. All right, now let's get down to the New York Stock Exchange, because as we get all revved up for earnings season, particularly bank earnings, let's find out what ETFs that you need to be watching. Bob Pisani has those in the ETF Edge. Bob.
Thanks, Brian. It's time for ETF Edge. We've got bank earnings straight ahead. Investors laser focused on how the group will start off reporting season. JP Morgan, Wells Fargo kicking things off tomorrow. So what's the best way to play bank ETFs here? Joining me to discuss, Todd Rosenbluth, CFRA, and ETF consultant Chris Hempstead, former head of ETF sales for Deutsche Bank. Todd, so far this year, the bigger, the better, the big money central banks, center banks, and even large regionals like PNC and U.S. Bancorp are outperforming the smaller names. And the market cap weighted Spider Financial ETF is outperforming the equal weighted regional bank by about 5%. Look at that outperformance there. Why is this happening? Why are the big banks outperforming the smaller banks this year, and is that going to continue?
So the larger companies, which tend to be in more of the market cap weighted products like XLF, which is a Financial Select Spider, or the iShares Regional Bank ETF, you're going to have more diversification of the revenue stream. It's not as dependent upon loans and loan growth, but broader areas of revenue that you're going to have: asset management, wealth management, trading, and capital markets. And so that diversification is going to help in a lower for longer interest rate environment.
Yeah, you're right. They do have trading operations, those big money center banks. Chris, we've got a low rate environment. Does a low rate environment somehow give a competitive advantage to a bigger bank, say, over a smaller bank? Is there any relationship?
It does. The bigger banks have a much deeper capital market structure that they can leverage for revenue that the regional banks don't have. So this persistent low market environment, the low rate environment, is going to favor the bigger banks.
What's amazing to me is even the regional banks is a bifurcation. They're getting bigger and bigger. If you look at the IAT, this is a market cap weighted of all the big regional banks. 5 banks are essentially half of the market weighting. U.S. Bancorp and PMC themselves are almost 30% of the weighting in these. Here they are. You can see what's going on. It's rather remarkable how big even the regional banks are becoming and dominating.
Yeah, and it highlights how important it is to look inside the portfolio. So that portfolio versus the other product from State Street, KRE, the regional bank-oriented ETF, which is equally weighted. Big difference in the number of holdings, big difference in the size of those holdings and a position. So roughly 2 or 3% of the assets in those larger regional banks, as opposed to 8 or 9%. You really got to look under the hood with ETFs.
Yeah, and we're always saying, do your homework, do your research. Look, IAT, if you want to play PNC and U.S. Bank, that's the better ETF for you. Most people gravitate to KRE. There's nothing wrong with KRE. It's equal weighted. But people look at it because it has a higher volume. But tradability, IAT S&P is right there with it.
Big difference between equal weight and market cap weight. We talk about that all the time. Todd and Chris, thanks very much for joining me today. For more ETF Edge, sit tight. Our live show online starts at 1 p.m. Eastern Time. ETFedge.cnbc.com will reveal what could be the next catalyst for the ETF boom and talk the Bitcoin ETF's latest hurdle and more. Brian, back to you.
All right, Bob, we'll look forward to that. Thank you very much. Well, options bulls, they are, as always, trying to find opportunity today in healthcare and energy. John has got those new trades for you coming up in unusual activity. And keep in mind, we are just now 1 month away from a very special halftime show in honor of Veterans Day. They're live for the Women's Memorial in Arlington, Virginia, Friday, November 8th. If you are a veteran, if you are part of a military family, or maybe you just want to join us that day to honor them, email your name and phone number to veterantickets@cnbc.com. The tickets are free. We're back up to that.
ETF Edge is sponsored by Invesco.
You're 169 in the queue.
I proposed on the 169. She got off for the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
L Brands is one of the worst performing stocks in the S&P 500 over the last week, dropping over 6%. According to our data partners at Kensho, after similar declines, the trend continues, with the retailer underperforming a month later. For more, go to cnbc.com/Kensho.
Well, Alexion shares, did I just turn on everybody's computer? Alexion shares have lost a quarter of their value over the last 6 months, but bullish options traders are playing for a bounce off those levels. John has that unusual activity at the Telestrator. John.
Alexa, buy me some stock right now. Right now, Brian, because here it was 140. That was back in May. There it was 135 bucks a share. Now it's $102 a share. So that's why we want Alexa out there buying our options, Brian. November options. So they're out about a month into the future. They bought them pretty quick, almost 5,000 of those at that 105 strike. So just above where we are now. Like that activity. I followed these calls. I'll probably be in this trade anywhere from 20 to 30 days. Second trade, Brian, as you said, energy. And Brian Sullivan's all about energy. This one looks kind of interesting. Apache. This one, back in May, was almost $40 a share, and now you're buying it for almost half off, Brian. Half off. Love that. These have a little more time. December options in this one. So they came in, they're buying December 25 calls with the stock down there at 21. Love that action. I like the upside and the risk reward on this one, Brian. And I have more time. So I'll probably be in these almost 2 months. I bought a bunch of them, and as you can see, the stock has been both moving up and option activity picking up throughout the session.
Yeah, we're starting to see a little action. I mean, they'd been trading like, I think the technical term is roadkill, pretty much.
Sir.
But when we talked about last week how the XOP, the big oil and gas driller ETF, is also starting to show a little sign of life. So maybe there's a little something there. We'll see.
There
John.
might be a chance, Brian.
Well, we'll see. Might be a chance. All right, John, come on back. All right. Shares of Nike hitting an all-time high today. Bank of America upgrading the stock to a neutral from an outperforms. It's not like some great big buy, but they raised their price target to 98 from 70. Stock's done great. It's up almost 30% this year, and B of A, Joe, sees a couple. It stock's at 95. The price target's at 98. Must be Columbus Day.
Why this is interesting is because they had the lowest price target on the street.
I believe the technical term for that is wrong.
Well, yeah, throwing in the towel, whatever the term you might want to call it.
Giving up.
They have momentum. And Nike reported a strong quarter, which is kind of inconsistent to the economic narrative globally. Right now, it's about international, it's about digital, and it's about what you're providing in terms of product to women. And that's where the strength in the last quarter was for Nike. So, yes, he's correct to talk about sportswear. And in that conversation with sportswear, you also have Lululemon trading to an all-time high. It's a name that I'm long. I know Pete Najarian is long and some others on the desk as well. So it's Lulu, it's Nike. Adidas is up 48% year to date. So, in this global economic conversation that we're having, what's the real weakness? Because
it's 32 times next year's expected earnings.
Okay, and that's a premium that I'm still willing to pay. I think Nike goes above 100. Back to the comments on the global economic weakness, it's selective because the consumer and consumerism seems to have some buoyancy when it's about a product they really desire.
What, Joe, are they going to do about this?
What is that?
This is the Jesus sneaker that's being sold for $2,000. It has holy water in the bottom of the shoe. This is not a joke. This is actually
I know. Who makes that?
$2,000 shoe. Air Max 97 INRI, which is king of the Jews.
Just be careful.
I'm going to bet they
don't press the buy button.
Yeah. I'm going to bet they don't need to do anything about it. I'll bet it's not even a blip. It doesn't even affect their revenues. But,
I know.
But on the wrong, we're wrong on this too. And it's that discipline of leaning towards value and keeping a reasonable market multiple that's kept us out of it.
I'm old enough to remember Colin Kaepernick. I mean, we had discussions on this network a year and a half ago. No, but it was, I'm making, obviously, being
3 years ago now, actually.
Or however long it was, but it wasn't that long ago that we were talking about Nike being doomed because of some of the things that were going on around the people that sold Nikes for them or that were sponsored by Nike. And a lot of people were pronouncing Nike toast because of this.
That's where I want
they're going to alienate America. I think there's probably, a Twitter campaign boycott Nike.
Nike endures that conversation all the time. Just go back to last week with the NBA. Yeah. That wasn't bullish for Nike.
Air Jordan's the biggest selling sneaker in China. Jordans are still the biggest selling sneaker in China, I believe.
Yeah. Under Armour, last week, Pete had unusual activity in that one. It's up 7.5% in a week. There's a lot that people are putting their money on right now, Brian. And obviously, the sportswear makers virtually across the board are catching that.
Good job by Pete. Yep. Good call on the under. I don't think I was there that day, so you forgive me for not
remembering. It was the only day last week you weren't.
The only day I was there. That was the day I slept. Okay. Pete Najarian, my second favorite Najarian.
Thank you.
The grounding. You got another brother. The grounding of Boeing 737 MAX entering its 8th month now, and the company's board is stepping and stripping CEO Dennis Muilenburg of his role as chairman. What that might be signaling, we'll tell you next on Halftime.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Teaching shapes lives. Becoming a teacher means a career of opportunities. You could head a subject department or work towards school leadership. And with a minimum starting salary of £24,000 to £30,000, teaching has never been so rewarding. Teaching. Every lesson shapes a life. Search Get Into Teaching. Starting salary dependent on location.
We could play epic music. Or we could speak in an overdramatic tone. Or even set off fireworks. But that's just not Smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's Smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Fly with Cathay Pacific to over 70 destinations across Asia and Australia and move beyond the familiar. State-of-the-art cabins, world-class entertainment, and award-winning service, making sure you arrive ready to make the most of whatever lies ahead. Whether it's the stunning coastlines of Sydney, the secluded waterfalls of Bali, or the baroque splendor of Manila, book now at cathaypacific.com. Cathay Pacific. Move beyond.
With the general election just over a year away, the top 12 presidential hopefuls reconvene tomorrow in Ohio for the 4th Democratic debate. While this edition features the most crowded stage yet, the field is set to shrink next month, making this many candidates' last chance to get heard.
You got to defend the fact that today, not
Houston, we have a problem.
Wherever you are, when the debate starts at 8 p.m. Eastern Standard Time, you can listen to CNN's exclusive live coverage on TuneIn. Just search CNN to listen.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Folks, I'm John Nigerian, and we on the Halftime Report love it when you send us your questions, and we want you to do that right now. Please, cnbc.com/halftime. Send us your questions. We'll answer them on air. We'll even say your name. How does it get better than that?
Go to cnbc.com/halftime or get us on Twitter with the hashtag AskHalftime.
All right, Boeing CEO Dennis Muilenburg has been stripped of his title of chairman of the board. It was in a move the company said was designed to allow Muilenburg to focus more on returning the grounded 737 MAX to service. So let's trade Boeing. The stock up with the market today, 0.3%. They're splitting the roles. Does anybody think this is going to change the outcome for the jet or for the stock, both or neither?
I think it's just a matter of time. If you're patient, the stock is going to rally. I think the stock has technically traded incredibly well since it's had the fundamental issues that it's had since March. I don't know when the time is going to be, but I think the stock is going to push above $400. To me, that's the next move.
It's amazing. It's still up, even despite the problem.
I have a different perspective. I want to see how the earnings play out in the next year as they're not doing the huge share buybacks that they've done over the past 3 years to keep earnings up. So I want to see what they're using this cash flow for, and I think it takes a year to show up. So I'm on the sidelines.
Anybody think that Muilenburg's job as CEO is at risk?
I don't think so. I mean, I would be surprised if it is, Brian. It's pretty close to an act of God, what has gone on with these jets and or undereducation of
stories
pilots.
out there in the papers. They rushed it into, they didn't, whatever.
I've heard from pilots the articles with a lot of hours that the pilots, in particular in the right seat, the co-pilots, didn't have nearly enough time in the jets. And that is a significant contributor to any accident. It's human. And if you didn't turn off that autopilot and instead you're sitting there fighting against the yoke, trying to make sure that, that the plane stays flying, that's a problem. And if you didn't have enough hours, that's a significant issue.
All right, we'll move on then from Boeing. Nobody's got a strong viewpoint. There you go. All right.
I like it.
You like it? You like it?
Sure, I like it.
Joe likes it. We all like it. There you go. All right. Not you?
Not Jen.
What's your beef with Boeing?
Wait and see. Wait and see. I got to see the earnings come in.
You got to wait and see.
I got to wait and see.
Okay.
I don't like it.
The desk is answering your questions next in a segment they call Ask Halftime Original. To reach us, go to cnbc.com/halftime or tweet us. We are back in 2 minutes.
The Halftime Report is honoring America's veterans once again this year. If you're a veteran or part of a military family, we want you to come see us live at the Women's Memorial in Arlington, Virginia on November 8th. Tickets are free. Just email your name and phone number to veterantickets@cnbc.com. The deadline is Monday, October 14th. Again, come see the Halftime team honor America's veterans at the Women's Memorial in Arlington, Virginia, November 8th. For free tickets, email us at veteranstickets@cnbc.com. See you there.
I'm 52.
Get to Trade Point for 3 for 2 on all paint, including Dulux Trade, Leyland Trade, and Valspar Trade. Plus, if you have loyalty discount, you'll get this on top. Don't miss 3 for 2 on all paint at Trade Point. Every third item per single transaction is send in price order free. Offer ends November 3rd. See tradepoint.co.uk.
It's going to be mild today, but with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
The throw, he steps up, he's going deep down the right side. Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long, free on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Read Kara Slave's article on the one ignored industrial stock that could be the best way to play a boom. Go to tradingnation.cnbc.com now.
All right, welcome back. The traders are answering your questions right now. It's a segment that we call Ask Halftime. Here we go. First up, David in Michigan. Where are you on the hand, David in Michigan? David in Michigan wants to know about Slack, Joe. Buy, sell, or hold Slack.
I am long, so
you're long Slack.
I'm going to say it, but I'm long Slack. A lot of it has to do, Josh made a very compelling fundamental argument for a reason to own the stock. They reported 12 million daily active users last week. Now, that has not done much to lift the stock. Stock really needs to regain some of the technical momentum that it initially had coming out of the gates. It lost it very quickly when it came out at $42. Got to get above 27.5 to reestablish the technical momentum. I will be very conservative here on the downside. If it breaks below the recent lows at 21, I will be out.
Okay. Out if it breaks below 21. Okay, for Ron, Dave in South Carolina is wondering why Beyond Meat has been falling so much lately.
Well, I mean, I believe in the food revolution, but I do think there's going to be a lot of competition. There's also been a spate of negative headlines around some of these innovators in the food area, questioning whether or not they're more nutritious, these vegan or vegetarian options, whether, in fact, they're going to meet with some stiff competition from the likes of Tyson, which is making vegetable-based chicken. Kellogg has products coming out. Some of the biggest meat makers in the world, if you will, are going to compete with these guys. So even though Impossible Burger's being rolled out, even though Beyond Meat's getting more and more deals with chains around the country, competition's heating up.
It's also faddish, right? I mean, a lot of it is just people are all over the pot stocks, then they move to Beyond Meat. You wonder where the trading community, you know what I mean?
Unless you use them in tandem and then go to a fast food restaurant. That's a whole different argument. But having said that, they are
That's at the front. An Uber play, hopefully.
Yeah, exactly.
To get my drift.
Play too, yeah. But I do think the food revolution's real, but I also think there's going to be very real competition from very large entities as well.
There's a lot of put buying in there today too, Ron. Yeah. A lot of put buying at the 130
either negative or hedging the long position. How would you read it? How would you read it?
Well, right now I think it's just straight out negative positioning. They're betting the stock breaks to about 100.
Is there a Beyond Turkey for Thanksgiving?
I do not know that.
Tofurkey.
No, I had a turducken, but that's a real thing.
Yeah.
A couple years ago, I had a turducken. A duck
That's a John Madden thing.
No, I had it. They're real. They're real.
John Madden brought that out.
By the way, the Beyond Meat does have sausage. I tried that. Wasn't bad.
But that's not Beyond Turkey.
No. It's turkey. Just eat turkey.
What are you going to have? You can have a vegan turkey and then stuffing, which is vegetable-based as well.
Yeah, I'm not coming to the Terra Nova house. All right, Jenny wasn't invited either. Arthur in Massachusetts, love your fish sticks, by the way, wants you to know if you still like B&G Foods.
I do. I've owned B&G for so long that some of my original clients actually have a gain in this, and they've made a ton of money on the dividend income as well. So at an 11.5% dividend yield, you definitely have to ask yourself, is that safe? I met with the CFO in May. We went through the balance sheet. We went through the cash flows. The dividend was safe. He was very strong, very adamant of the dividend safety there. They bought Jolly Green Giant a couple of years ago, and that integration has been, I would say, like a little rougher and a little slower than expected. So this is one where a lot of company earnings reports, you kind of sit back and you know it's coming to you on the conference call. And this one I'm always nervous on, and I'm always listening. And I will be for a while until we see them start to integrate Jolly Green Giant well, and until I think the market uncertainty over that 11.5%.
But you still own it.
I still own it.
So you would say there's a Mrs. Dash of hope on the stock.
Yes, I would say. What does Emerald say? Because they have Emerald sauces. What do you say? Like
well, they own Mrs. Dash. They own Mrs. Dash, Ortega, Green Giant. If you're wondering who B&G Foods is. All right. And Parsippany, New Jersey, the capital of foods.
Portfolio.
Anita in Seattle says she's a 25% loser so far in Win, John, and she wants to know basically if she should, stay at the table or take the loss and walk off and Win.
Well, don't put good money after bad, Anita. But I do like Win here at this level. I luckily am not somebody who's suffered 25% drawdown in this one, but I believe that the tables are very active right now, and I was just out there this weekend. I'll be back there in 2 weeks. Very crowded. There's a lot of upside call activity too, Brian.
I'll be there tomorrow night, so I'll do a first-hand report.
Please.